Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Real quick grain summary for today, Tuesday, April the 7th. Pretty quiet. We'll just start with corn. I'm of the belief, and we're of the belief, corn's really just a follower right now. No real story. You're seeing how tight the ranges are, and you're noticing as well when we do see a move, there's usually a catalyst, whether it be the wheat market, the soybean market, the dollar, you name it. There's usually something that's causing corn to get moving. So today, a whole bunch of nothing. Initially, you saw weakness in the wheat market. Let's realize we went up and tested our resistance near 545 there yesterday, and then today we went all the way down, and I mentioned support yesterday's video somewhere near 520. Obviously, we went a little bit deeper and then bounced sharply. If you think about it, effectively for wheat traded all the way down to 517 3/4, only to eventually go all the way back to 534. So it basically took a 16-cent rally in wheat to get corn 2.5 cents off the low. So wheat's going to continue to be as choppy as it has been. We're going to watch the weather. I usually view it as the weather comes out, market reacts sharply, and then the next weather report oftentimes is almost the exact opposite. So you got to just continue to fade those short-term extremes when it comes to wheat. Obviously, April's a very important month. Once we get through this month, perhaps from a weather standpoint, it'll calm down a little bit. Obviously, you can see in the option market that the volatility is considerably higher in the wheat than it is in either soybeans or corn. Looking at the soybean market, I thought it was another very weak trade today. Even though we didn't have much of a range, we had early strength last night. Once again, not only was it a selling opportunity, but the market drifted lower for the rest of today. I think the meal market is pretty much the concrete boots right now. Just cannot find a buyer. The fact that you've got May, July meal spread at a 2 or 3 tick spread right now, that's not bullish. And until meal can find some footing, I'm just going to be pretty much staying away from the beans. Certainly not really interested in pressing the short side here, but it's very difficult to be a buyer when meal acts as poorly as it does. So for the rest of the week, we'll be waiting on export inspections, obviously. Don't really look for a whole lot. The strength in the dollar today, especially with the dollar making new highs as the pit closes, certainly is going to be a bit of a headwind. If we can see the dollar retrace and calm down tomorrow, perhaps corn and wheat can do a little bit more consolidation or a move higher here. But soybeans, I don't have a whole lot of faith in them until we can get this meal market to slow down or turn around and catch a bid. So that's all there was today. Pretty slow trade. If you got any questions, give us a call. Again, this is Kyle with International Futures Group, a division of EFG Group in Chicago. Thank you.